And the approach that Hong Kong is doing is taking is pretty much different than many places out there. How big of a deal is it?
Yeah, it's really about trying to establish what would be really the future for Hong Kong, or what it sees as the future of finance, because it has obviously, as we've been discussing, been under pressure. Its status over the past couple of years, a very tumultuous period for the city. And so this push to become a virtual asset trading hub really plays into the way that the city is trying to position itself. But you talked, of course, about the enforcement actions we've seen. It's not just in the US, which has obviously been the big focus with the SEC. They're really cracking down, but also including in this part of the world. Just this week we had enforcement actions in Malaysia, the Philippines. So Hong Kong is really taking this as an opportunity where it's a sector that it can lead in and also be sort of at the global forefront, considering when you have the likes of IOSCO, which is sort of a securities watchdog at an international level, saying that there needs to be greater harmony between the different jurisdictions in terms of how they look at this sector.
We knew anyway that this was the direction, right? June 1 was the talked about date. What details did we get that we didn't know before yesterday?
There were a couple of things that changed from the original blueprint, which we can get to in a moment, particularly around responsible officers. But yeah, as you said, it was largely in line with what we had been expecting. I think the key thing to take away from what the rules are in place for June 1 is that this is really a regime that's going to be high on investor protection. So the thresholds for any exchange that is looking to come here, it is a very high bar that they're setting for it. In terms of the securities or the tokens that can be offered, that is quite strict compared to other jurisdictions. So for instance, each token needs to be included in at least 2 acceptable indexes, and that's really about ensuring that there's high liquidity for these tokens. So when it eventually does start this new regime, it's going to be just a handful of assets that are really being offered to investors. It's like Bitcoin, Ether, just really the major tokens. So it does really put a lot of pressure on these exchanges. It probably means that there's only going to be a handful that can really be functioning here, given that these are companies that rely on high trading volumes in order to be profitable.
Annabelle, you know, we had protests in Hong Kong, then we had the whole COVID pandemic, and we saw an exodus. You'll be looking at how there probably some difficulty filling some jobs here. Yeah,
there's always a number of key positions that are quite challenging to fill in Hong Kong. There's developers are difficult to find from conversations with people in the industry. Anything to do with compliance can also be challenging. Trading from an institutional perspective, especially given the amount of instability that's been in the crypto sector, it can be quite difficult now to try and lure people away from traditional finance. But one thing as well that's just come out is the lack of responsible officers that are in the city. So for each license type that you hold, you need to have 2 of these so-called responsible officers. They're sort of like the conduit between the company and the regulators, and so they make sure that the company is compliant. And so essentially this is a position that's been very difficult to fill, but the SFC has recognised the lack of talent available in the city, and so they've essentially made it easier. And so they may end up approving 1 single individual as an RO under both the securities and also the anti-money laundering ordinances as well. So it's just something that they're taking to try and allow more people to fulfil the criteria.